Hello, Cleveland, and welcome to your daily TA. Let's get into the charts. So, that bear flag that we were looking at yesterday on the 90-minute chart right over here played out. Not exactly to the measured move of 91189, but close enough. It got down to 91410, which just like in hand grenades and horseshoes, close is perfectly fine in trading when you're talking about chart patterns and such. So now that we've gotten rid of that bear flag that has played out, what are we looking at? Well, we're looking at price action coming down to this local support level that we have been talking about for a little while now. And that support level is right around $92,000. You'll see that we are under it currently. Price action is currently finding itself under it and will need to break out over it if the bulls have any chance at all of turning this around. Now, I'm going to tell you straight up, it's about a 70-30 chance to the downside. It's not looking good. I mean, look at these indicators. RSI is way down there, not forming any higher lows, showing zero signs of bullish divergence. The stochastics on the 90-minute are still showing downwards momentum. Just now moving into oversold territory. Those are that's one of the small bullish signs there, but we're going to keep going over the bearish ones here. Well, no, we can go over the bullish ones too. So yeah, if bulls can find support here in oversold territory on the Stokes, start pushing price action back up over 92, and then can get up back up over 94, we'll be in a good position for the bulls to maybe reverse. However, again, it's only like a 30% chance. Most of these indicators are showing us bearishness. I mean, we're under the 200 on the 90, we're under the 200 on the 6 hour. We are under the 50 and under the 21 on the daily. The 200 on the daily is way down here near 71. So I guess the question is, are we going to make our way back down to that daily 200 MA? Where will it meet up? Because, I mean, it's not just going to dip right down to 71. It'll probably slowly make its way down there with some pretty big dips along the way and eventually find connection with the 200 somewhere here in the golden pocket of the fib retracement on the daily. So that's what I think is happening. I think that we're going to go down to roughly 85, like we've been saying, but then there's a good possibility that the lettuce hands, that's people who sell when they're scared, bring it down even further into this golden pocket region. That's exactly where the bear flag on the 6 hour chart is showing a measured move down to. So yeah, that's where we're going. There's still that chance, like I said on the I said here on the 90-minute chart, if they can get back over 92, the bulls can push price action up over 92. That'd be great. Oh, and two more things. One more thing here on the 6 hour. You'll notice that price action is slightly putting in slightly lower lows, while RSI puts in a higher low. move this up a wee bit so we can see this just a bit better. You can see that there is a slightly higher low on the RSI. Now this could also just go away if price action dumps. RSI will dump, and this hidden this bullish divergence here between price action putting in a lower low while RSI put in a higher low, possible higher low, that would be a bullish divergence. So again, if the bulls can bring it back up over 92, hold it up over there and continue pushing, this divergence will be marked when the RSI starts moving up on the 6-hour chart to match the 90-minute chart. And when that happens, we'll see a new actual higher bottom forming here on the RSI and the 6-hour chart. That would validate this bullish divergence here, and hopefully send price action back up to where, well, maybe this wonky W on the daily can still play out. Maybe not though. Maybe, like I said, 30% chance to the upside, 70% chance to the downside today. Oh, and let's get rid of this bearish div, as that is no longer valid now that price action is putting in lower lows as well as RSI. So that is now gone. That's been played out. However, the bullish div is technically still here. Same deal with the 6-hour chart. This could go away if price action drops down to that 85 level that we've been talking about. Now, if that happens, then this bullish div goes away because price action is putting in lower lows now. But if the bulls can catch here or anywhere, above even this resistance or this support level of 89.8 or anywhere over 85, really, anywhere over that, let's not even say 85, let's say 87.2. So we need to stay over this 0.5 Fibonacci retracement on the daily. As long as as price action stays over that level, then we're still seeing that bullish divergence, and there's still a chance that this W plays out, and we see those peak levels again, or maybe even going higher. One last thing that I'll mention again, just to mention it again, in order to invalidate that bear flag on the 6-hour chart, price action needs to get up here over 102.7-ish and put in a new higher high there. That's what it needs to do. Needs. Soft break of this 99.6 level would be great too. That would also put in a local higher high. And then if afterwards we can see another higher low, let me draw it out for you. But yeah, if we can see another higher high, higher than 99.6, the bear flag won't be invalidated, but it'll be a good play. It'll be a good time to look for a higher low to show us that maybe we're going to test that again and then move up. We'll see though. We shall see. Again, 70-30 to the downside. Things are not looking good. Thanks for watching. That's really all I got for you. Watch for those levels to hold, that 92 level to hold, or, to get back up over. If not, expect 85, man, with a brief stop at 89.8. Possible reversal. All right. Stay safe out there. Practice good risk management. Don't over leverage yourself. Don't put in more money than you're willing to lose. This is a dangerous game, and the market can go anywhere. It's a very volatile market. All right, much love. I'll see you later. Oh, and thank you, Luminist, for providing the music for today.